Hey everybody, welcome back to everyone's favorite stock show, the Wealth Advisory's Top 10. We are, as you can see, on to August 2024. July was a pretty darn good month for us. Jason had a phenomenal performance. I want to say 3 out of your 5 stocks had double-digit gains.
Yeah, I really crushed it.
And you really did, man. And were it not for QuantumScape going up like 50% this month, you would have definitely come away with a much higher average than me. But combined, man, our average was crazy. I think we averaged like 8 to 9% gain last month, while the markets were up, but they were, I want to say 1 to 3%. I checked on it last night, but it was late last night. So, but yeah, a 9% gain for the month. I mean, that really just shows the value of these videos, of getting like the full stock picks, because yeah, like QuantumScape was great, but you wouldn't have gotten most of Jason's double-digit gainers if you were just watching on YouTube. So, I tell you guys that are watching on YouTube every month that there's a lot of value in a membership, and I think last month really shows it. So anyway, but that's last month. We're on to this month. Markets are betting on a Fed rate cut. We've got bets of at least 2, perhaps 3, and now I'm hearing sort of like whispers of maybe a 4th. Markets maybe wouldn't be surprised to hear one coming this week at the Fed's after the Fed's meeting is over on the 31st. So. It's all sort of up in the air. The markets tend to rally into rate cuts. I think if the Fed were to really surprise the markets with one this month, that they wouldn't react well, because, they would see the Fed reading recession. Excuse me, I almost said inflation. But they would see the Fed reading recession and, probably bet against that. But if we, continue to get this run up as people bet on rate cuts in September and then November and December also, I think like the last time I was in the studio, there was 100% odds of a rate cut in September, which, I don't like to give 100% odds of anything that's not currently happening, but, that's pretty good odds. So we're likely to see rate cuts, and I think, in my picks this month, you're going to see some of that sort of reflected. These are companies that are going to do well with a lower rate environment. They're going to do well like coming up into it too. You've seen that this past month with the real estate. All of our REITs were up. Most of them up double digits, but all of them up at least single digits, like with the market or outpacing it. And I think you're going to keep seeing that as we see, more and more talk of the rate cuts actually coming. Those rate cuts then, sort of falling down through the system, because, as they love to say, the Federal Reserve's interest rate doesn't control mortgage rates, doesn't control this, but it does, influence them. So as the Fed's rate comes down, you might see mortgage rates coming down. You're probably going to see investors rotating into the real estate market. You're already seeing them rotate out of these big tech plays, which is sort of why the market has been kind of like up and down, because the big tech companies just make up so much of the indexes. You're talking about 70-something% of the gains of the S&P 500 have come from 7 stocks. That's this year. I don't want to make it seem like that's like the all-time or whatever, but like this past year, that's a lot. And, so people are starting to rotate out of those. They're looking for sectors that have underperformed the market. They're getting into smaller cap stocks. It's sort of a more risk-on mentality, because lower rates are good for these kinds of companies that, need to grow, because growth comes cheaper. So anyway, let's go ahead and get into the top 10. Before we get into it, I will point out, as I always do, that we're going to cut this off after our first 4 picks. For those of you watching on YouTube, this is a service that we provide for our paying members, and we don't think it would be fair to give it out for free when we're charging them for access. But if you'd like to join us, as we've already said today and said many times in the past, it's well worth it. And we'll put a link in the description below the video where you can click to get a discounted offer to join us as a full-fledged member of the Wealth Advisory, where you'll get access to the full top 10, weekly updates, monthly issues, monthly stock picks, all of the research reports we've ever written, all of the articles that we're going to write in the future, as long as you want to be a member. It's well worth it. We highly recommend you join. But if you don't, as I always say, we won't hold it against you. We'll keep putting these videos out as long as you want to watch them. Just subscribe to the channel, like the videos, give us a comment here and there. I love to see what people are thinking. And don't forget to hit the bell to be notified of when we post new content. And so, with that all being said, let's get into the actual stock picks that you guys are here for. With my first pick, our number 10 stock this month, Viper Energy, which sometimes I'll call Venom because the ticker is VNOM. And so Viper owns royalty interests in producing oil assets, right? And so it gets paid royalties for every gallon or every barrel of oil that comes out of the ground of these assets. It then shares those with investors through really lucrative dividends. As I said earlier, rate cuts are getting priced into investments, and lower rates mean a weaker dollar. Weaker dollars are good for oil prices. We've also got, rising, escalating conflict in the Middle East. A lot of oil comes from there. A lot of oil passes through there. They're talking about, ceasefire talks between Israel and Hamas, but things are still kind of like heating up even more and more. And Iran's president just, said something about, an attack against Hezbollah would have serious repercussions. And Israel's basically said, we're definitely going to get back at Hezbollah because they did this. And, that's going to be bad for, global peace, but probably good for oil prices. If OPEC continues with their cuts, that's going to be good for oil prices. And everybody says, China demand slowing, blah, 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 but demand is not slowing, and demand has not slowed, any of these times that they said that it's going to happen. I think that that's going to be really good for oil stocks, really good for Viper. And Viper especially is going to be reporting earnings in the next few days. Good results should boost the stock price, and good drilling results would boost our dividend. Last quarter, we got a 3 cent per share increase, which isn't huge, but, it's still an increase, and, you can't complain about that. And this coming quarter, higher average oil prices, is what they're going to be reporting on. So that means that we may see another bump coming in the dividend because we'll have better profits this month or this quarter. So Viper, my first pick, VNOM. And with that, I will pass it off to my partner over here, Mr. Simpkins.
Yeah, good stuff.
Because his next pick is a good one too.
Yeah, it's one of my favorite stocks, actually. An old standby to mine. This is Oshkosh. Okay. I've talked about this one quite a bit, but it's always worth revisiting. When you think of Oshkosh, whether you recognize the name directly or not, you're thinking basically of big trucks. Fire engines, mail trucks, the kind of heavy-duty equipment you see on an airport tarmac, all that stuff, light vehicles for the military. They make a lot of heavy-duty stuff. But what's great about Oshkosh is that they're always looking forward and they're always evolving. And they're one of these companies that has really leaned, and I think more than most, into AI before it was the hot, trendy thing to get into. They have over 200 AI algorithms helping to respond to customer service, email suppliers, follow trends, track inventory, all that kind of stuff. And they've been able to use that to streamline their business. And that comes along with, top line growth of simply selling more heavy equipment. And what I'm going to talk about a lot today, if you watch this video, is earnings. Companies, because we're right in the middle of earnings season right now. So every company I'm going to talk about today is either reported big-time earnings or I think poised to report big-time earnings. Oshkosh still has its second quarter earnings coming up in the next few days. In the first quarter, we saw a 100% increase in diluted earnings per share. So we're talking about more than doubling that. It was actually 102. Adjusted earnings per share up 77%. Sales up 12%. They raised their full-year forecast, and they declared a quarterly cash dividend of 46 cents per share. Again, that was in the first quarter. Now we're going to see what the second quarter looks like. But what I love about Oshkosh is how reliable it is. Its trucks are just scream reliability, everything that it makes. But again, we talk about increased efficiency too. That's where we're really seeing the growth. And they've really been able to expand their margins and improve their income and their outlook and all their profit margins. And that's why they've been going up. I haven't checked exactly where the stock is since we recommended it, but I think we're up something like 20% on this one already. And I think it's still got a really strong year left to go. So we're starting off here with Oshkosh.
Definitely. That's a very good one. I really like that one. And you are right to mention earnings because a lot of my picks have to do with earnings too.
Once you're in earnings season, it's just, it's all over the place. And like I said, if they haven't announced them already, they're going to either, this week, next week, and the weeks ahead. So it's definitely prime time to really kind of get a look at what some of these companies are doing. And apropos of nothing, like we're not talking about McDonald's today, but I was just writing about, McDonald's and its struggles because they, ran up menu prices prices over the past couple years to exploit the post-pandemic rebound, and now their earnings are tanking because they're leaving traffic on the table and people aren't spending that much
same-store
money
sales fall for the first time in like almost a decade. Or
Yeah,
something
exactly.
Like that.
It was
since
since
that happened.
2020. I'm pretty sure in 4 years, 16 consecutive quarters, first decline in year or same store sales.
Yeah,
Right.
you got to wonder if that's a
So,
blip or if that's something that's going to continue.
those are the kind of trends that emerge in earnings season.
Yep.
So that's a bad one, but Oshkosh is a good one.
Yeah, no, I definitely think we've got a good one there. And my next one is also an earnings season related pick, and I actually literally wrote that down. This is another play on upcoming earnings. It's Bunge that I intentionally but accidentally was calling Bung for the longest time when I first recommended it. We're pretty sure it's Bunge. It could be Bunge, but it's Bunge Global SA, ticker symbol BG. So we'll just go with BG and try and avoid mispronouncing the name. But anyway, since we're getting this one out a little bit earlier than we usually do, this video, we're going to catch Bunge's earnings report. It's going to be, I want to say, on the 31st. So we're going to try and get this out actually on the 30th, which is earlier than we usually do, which is great because you'll catch the full month this time. But anyway, Bunge's earnings report's coming up, and analysts are lowballing the company. They've got an average estimate of a 50% EPS drop. And Bunge has beat earnings estimates the past, the past several years. Not just several quarters, but several years. It has a good record of beating its earnings estimates. And, earnings were pretty high last quarter. They're saying that it's going to be a 50% drop. I just don't see that happening. So with management having the habit of beating even high expectations, I really think this unreasonably low one should be a breeze. I also like Bunge's new partnerships. I've been talking about this a lot. Bunge is an oil seeds company, basically. They engage in growing it, trading it, shipping it, processing it. But they've also been doing partnerships in the biofuels market because biofuels need seeds that have lots of oil in them. And anyway, recently one of those joint ventures got 100% acquired by the partner BP. So they had done this joint venture with BP to develop this biofuels facility, and BP is going to buy out Bunge's half of it for $1.4 billion. So I think it really shows how valuable an investment these projects are, and Bunge has more of them. They're an expert in the field. Lots of people are going to want to partner with them. Plus, if they come out and crush earnings like I think they're going to, we're probably going to see this stock soar. So there's my number 4 pick, our number 8 pick for the month, Bunge Global SA, ticker BG. All right, and next up is another good one from Mr. Simpkins, another earnings-related one too.
And this one has already paid off for us. There's a ticker symbol right there. It's RTX, formerly Raytheon, now RTX. Again, if you're a longtime viewer, I've been talking about this one a lot, and you could go back to last fall when it dropped below $80 a share due to a recall in the Pratt and Whitney division. Today, it's up over 115. So, if you're looking at that period, you're sitting on probably about a 50% gain on one of the world's preeminent defense contractors, and a company that pays dividends and has done really well for itself. And like I said, it's up about that much since I've been talking about it, at least over the past few months since that recall. I think we got it into the portfolio maybe somewhere around $90 per share in there. It's now up 115. Why? Up 12.5% in a single day after reporting earnings last week. They raised their full-year projections for revenue, for adjusted earnings per share. All of that goes up. $206 billion backlog that they called due to unprecedented demand, quote unquote. That's the kind of growth that they're seeing. And getting back to that Pratt and Whitney division, and Collins Aerospace, 8% year-over-year increase in sales for them, 19.7 billion. That's the commercial side of the business. And again, when we talk about companies like Raytheon, or to another extent, maybe a company I'm going to talk about later, but it's what they do with military and defense contracts, but also what they're now doing in the private aerospace center. And we've seen commercial aerospace improve steadily ever since we got through the pandemic. It's been a really good growth industry there in terms of like commercial airlines and people traveling and that kind of stuff. And that's why Pratt & Whitney and Collins Aerospace are up. They make a lot of like engines for private planes and stuff like that. So they did well. Raytheon as a whole, $1.9 billion in adjusted net income, topped expectations of $1.7 billion. Just absolutely humming on all metrics, okay? And again, we talked about the commercial aerospace. We talked about getting that under control, coming away from that recall, that product recall, and coming out on the other end of it way further and way faster than anybody really anticipated. You could see the kind of momentum that we'd anticipated and now really hit a crescendo. And then, as Dubs was kind of talking about with global instability, things are not great in the Middle East, okay? They're really bad. Over the weekend, it came really, really close to this war broadening out because there was another basically terrorist attack from Hezbollah that targeted a soccer field that killed about a dozen Israeli teenagers. Israel got so close to going to war with Hezbollah in Lebanon. It was a really terrifying situation. It's still not over. It's not improving, okay? And then meanwhile, you do have the war, like we said, now going on 3 years in Ukraine with Russia invading. It's an ugly scene out there, but it's one where companies like RTX are profiting from and are actually on the right side of these fights, and that's important too.
Mm-hmm. Mm-hmm. Yeah, it's definitely a sad state of affairs there,
Yeah.
I mean, and you mentioned Ukraine, you don't hear about that as much in the news because, you're hearing...
People tired of it, fatigue.
Yeah, and, there's the hot new war to follow in the Middle East. But, it's definitely it's a scary situation. But, like we say, like this is why defense contractors are good investments because, in times of peace, they make money. And in times of war, they make even more.
Right.
So those are our first 4 picks for this month. Let's go ahead and do a little recap, and then we're going to cut things off for YouTubers before we get to our next 6. So first off, number 10, Viper Energy. Like I said, it's coming up. It's reporting earnings soon. I think it's going to blow out the numbers. I think we're going to get a dividend increase in the near future. And I think that oil is just a good investment. It's going to do good with a weak dollar and lower rates. It's going to do good because, people are demanding it and the market is mispricing that demand.
Yeah, Oshkosh, steady as she goes. Blockbuster first quarter earnings. Their second quarter is going to be reported imminently. I think it's going to be more the same, more good news for them going forward. There's nothing that's going to adversely affect Oshkosh right now. They're just their business is strong and they're just getting better with it.
Yep. I really like what they've been able to do with the AI too, because you mentioned that, and I've seen a lot of headlines recently about like, oh, is AI really as great as it was cracked up to be, and blah blah blah. I'm like, it is going to be as big, if not bigger, than people are saying. But yeah, maybe the productivity gains might not be quite as quick, but Oshkosh has really seen them, and they started implementing this early, so they're seeing the gains now.
Everybody wants a piece of AI now, but some of these companies know how to use it, and that's a very key difference. I mean, everybody now, a lot of companies now are playing catch up with respect to the technology. They're trying to climb on board because they realize it's hot, because they realize now how much it can help them. But it's companies like Oshkosh that have already been doing it since 2019 that are again ahead of this trend and are now in the process of refining that technology to improve their business rather than simply adopt it.
Yep. I love that, and that's so rare to find in such an old company. Like such a long, such a long legacy. But I digress. Let's get through this wrap up for you guys, so you can get back to your day, and we can get on with the video. So next up at number 8, Bunge Global SA. Like I said, a lot of these have to do with earnings. As Jason said, a lot of these have to do with earnings. Bunge is going to be reporting earnings. I think analysts are lowballing them, and I think management is going to really surprise to the upside. I also like their partnerships in the biofuels area, just as a long-term thing. So Bunge for number 8, and coming in at number 7,
Yeah, RTX really broke through with its second quarter earnings report, like we've been predicting for months. Like I said, we're up significantly on that company, especially since October, November, when we start talking about it on the top 10 in particular. 12.5% in one day on earnings, and more good things to come for them.
Definitely, and you'll see that continue to drift the share price to that good earnings announcement. Yeah. So there you have it, guys. These are our first 4 picks. Now, for those of you on YouTube, we're going to cut this off, but like I said, there's a link in the description below the video. Click it. Will give you access to a discounted membership. You'll get access to the full top 10 video, plus all the other things that come with being a member. It's well worth it, but we won't hold it against you if you choose not to. We'll keep putting these out. Just subscribe to the channel, like the video, give us a comment, and hit that bell to be notified when we post new content. And have a great month. We'll see you next time.